Did you know that some traders make up to $10,000 per week using Bitcoin trading bots? Sounds unbelievable, right? But is it really possible, or just another online myth? With crypto constantly evolving and new AI-powered automation tools emerging, many claim they've unlocked the secret to effortless income. Today, I'm putting these bots to the test to see if passive income like this is truly achievable. We'll dive deep into the mechanics, risks, and real-life results. Stick around to the end, because you won't want to miss what we discover. Welcome to the channel. If you're new here, make sure to subscribe because we explore the best strategies for financial growth, automation, and crypto trading. We've all heard about crypto millionaires who seemingly cracked the code and now live the dream. But what if I told you that some claim they're making thousands of dollars per week without actively trading? Instead, they let trading bots do all the work. The idea of automation in trading is nothing new. Institutional traders and hedge funds have been using algorithmic trading for years. But now, thanks to technology becoming more accessible, everyday traders like you and me can get in on the action. So, what's the catch? Are these bots the real deal, or are they just another hyped-up scam? In this video, I'll break down how they work, test one myself, and share insights on whether this can be a sustainable source of passive income. Let's dive in. The crypto world is full of stories, some of extreme wealth, and others of devastating losses. The reality is, passive income in crypto isn't as simple as clicking a button and getting rich overnight. The market is highly volatile, and many people have lost fortunes by investing in unreliable systems or being misled by scams. Here are some of the biggest challenges crypto investors face when trying to generate passive income. Extreme volatility. The crypto market is notorious for its price swings. A coin can gain 50% in value one day and crash 30% the next. Trading bots are designed to take advantage of these fluctuations, but not all of them succeed. Scams and Ponzi schemes. With the rise of automation, fraudulent companies have launched fake bots that promise unrealistic returns but ultimately disappear with investors' money. Algorithm complexity. Not all bots are built for success. Some require advanced programming and continuous monitoring to perform efficiently. Over-reliance on automation. Bots remove human emotion from trading, but they aren't perfect. Market conditions change, and relying on an unoptimized bot can lead to losses. So, if passive income isn't as easy as it seems, why are so many people turning to trading bots? Let's break it down. Trading bots use advanced algorithms, AI, and machine learning to analyze market trends and execute trades in real time. They eliminate emotional trading, work 24/7, and can react to market conditions much faster than humans. Some of the most popular bots, like 3, Pionex, and Crypto Hopper, have gained traction because they provide users with pre-configured strategies and automation tools. Here are the main types of trading bots. Automated trading bots. These bots use preset strategies based on technical indicators such as moving averages, MACD, and RSI. Scalping bots. Designed for quick, small trades. These bots profit from minor price fluctuations within short timeframes. Arbitrage bots. These bots exploit price differences between exchanges, buying on one platform and selling on another for a profit. Grid trading bots. These bots set predetermined buy and sell levels to maximize profits in sideways or ranging markets. But even with all this automation, do these bots actually work? It's time to put them to the test. I've set up a trading bot with an initial capital of $1,000. Here's how I configured it. 1. Trading strategy. Aggressive scalping. 2. Indicators used: RSI, MACD, Bollinger Bands. 3. Risk management. Stop loss set at 2% per trade. 4. Trading pairs: Bitcoin, USDT, Ethereum, USDT. The bot will run for a set period, and we'll analyze its performance, comparing it to manual trading strategies. Let's see what happens. After a few hours, here's what we found. Profit, loss. The bot generated a 3.5% return on our initial investment. 2. Winning trades: 78% of trades were successful. Key takeaways. While the bot performed well, we noticed it struggled in extreme volatility, reinforcing the need for risk management. Most beginners make costly mistakes when using trading bots. Here are the most common ones. Over-leveraging. Using too much leverage amplifies both gains and losses. It's risky, and a small market dip can wipe out an account. Not setting stop losses. Trading bots don't always protect against heavy market swings unless you configure them properly. Falling for scams. Not all bots are trustworthy. Many promise unrealistic gains but deliver losses instead. Ignoring market conditions. Bots follow algorithms, but market trends shift. Keeping an eye on macroeconomic trends is crucial. Letting bots run unchecked. Even the best bots need adjustments to optimize performance over time. Will trading bots always be profitable? The answer depends on market conditions, evolving AI technology, and competition. Institutional traders will always have the edge with more sophisticated algorithms, but retail traders can still leverage automation if they adapt. So, are Bitcoin trading bots the answer to passive income? The short answer: they can be, but only if used wisely. Proper configuration, risk management, and continuous monitoring are essential. If you're considering using a bot, start small and test strategies before going all in. Remember, there's no such thing as guaranteed income in crypto. It all comes down to strategy and smart decision-making. Have you ever tried a trading bot? What was your experience? Share your thoughts in the comments. And if you want to maximize your profits, don't miss my next video, where I'll break down how to fine-tune your bot settings for optimal results. Subscribe and like this video if you found it useful.